This is my opinion, but I'm really going to say it. The most honest financial giant on Wall Street has died. John Bogle, founder of the famed Vanguard Group, died in Bryn Mawr, Pennsylvania last night. He was born the year of the Great Crash and Depression, 1929. I was honored to know John for 20 years. He cared deeply about his customers at Vanguard. Bogle fought bitterly and often and hard against high fees, and he was the king of index investing, where people could have exposure to the markets but didn't have to pay so much for it. John Bogle was 89 years old, and he will be missed. Joining us now in a Fox Business exclusive, Nobel Prize-winning Yale economics professor Robert Shiller, also the co-creator of one of S&P's core logic Case-Shiller National Home Price Index. And I know that you were a compatriot of Jack Bogle. This must be a tough day for you.
Yeah, well, I admired him. Integrity is, well, he was living proof that integrity is a long-run good strategy. He argued, it goes way back to his undergraduate days at Princeton. He wrote an essay about mutual funds and are they serving the public. All through his life, he was working to make them a better service to the public.
Yeah.
And ultimately, it paid off.
So I'm right? I mean, he had integrity. He was that honest guy on Wall Street. I'm glad I wasn't overstating it, but he was just one of the greatest. Let me turn and shift to what's going on right now, and we want to pick your brain a bit. First, on the economic effects of the shutdown, partial shutdown of the government. The Trump administration had to rejigger its initial estimates, and now it is pretty much double what they had thought would be the attack on the GDP. It's now going to be, they say, 0.13% each week that this shutdown goes on. That is knocked off GDP. Is that what your research and models are showing you? I'm interested to know. Higher, lower?
Well, I would say I'd like to suggest the longer term. The 0.13% that you described is short term. It's inconvenience. I'm a little bit annoyed. I'm leaving for the World Economic Forum next week. I don't know if I'll get there with the possible TSA problems. I probably will. It's at that kind of level of annoyance that the short-run impact is. But the longer-run impact is a loss of trust and a sense of polarization that I think inhibits really good business dealing. That's hard to put a number on. But ultimately, one thing that's great about America is that for centuries we have trusted each other, and we have stayed within the rules, and we play honestly. That ultimately is damaged by the kind of discord that we see at this present time.
So, but can I, and I deal in numbers here. I'm interested because if this goes on for a quarter, suddenly GDP goes from what people hoped would be at least 2.75% to zero.
I don't know. That sounds high to me, but it depends. We'll watch and see how it goes. Right now, it hasn't affected, except for the government employees, it hasn't affected most of us very much. I really think we have to think long term, and that's one thing that Bogle, I think, and you mentioned before, was advocating. In the long run, we have to stay the course and stay true to our principles.
All right. Let's talk about the principles of the housing market. You call the current boom in housing gigantic. What do you see as a big threat, though? Because the housing boom for this modern era seems to be slowing just a little bit here as interest rates tick higher. Right. Are we going to see some type of bubble burst on a smaller scale, certainly from the financial crisis? But if so, when and what would trigger it?
See, yeah, I figure that just looking at the magnitude of home price increases, we are going through the third largest boom in home prices since 1890. There was a 1942 to 47 boom, and then there was a 1997 to 2006 boom, which were both bigger. So this is a pretty big boom. So I think, to me, it makes the outlook uncertain. If you look at a plot, it looks very reasonable to suppose that home prices would fall substantially in the next few years. I think that's a possibility. On the other hand, these things are hard to forecast. And home prices are still, in real inflation-corrected terms, overall, not even back up to the level that they had in 2006.
Okay, well, that's good news. I mean, we certainly don't want to see that kind of froth, but thank you so much for joining us. You know, are you worried at all about anything? Anything keeping you up at night? Is it student debt?
Student debt is a significant problem for a fraction of the population. You know, in terms of predicting the housing market, it's a factor, but it's not a huge factor. The total student debt is about $1.5 trillion at this time, which is dwarfed by the size of the housing market. But it does affect starter homes and young people's decisions, and in some cases heavily.
Thank you.
It's a concern.
It is. I know it.